You know exactly what I'm talking about, right? If you've shopped online at all recently, you've definitely seen it. That brightly colored button offering you 4 easy payments of $25. It's the classic buy now, pay later framing for a totally standard $100 purchase. But notice how it absolutely never says $100 of debt? Well, that is incredibly deliberate. And honestly, it's working so incredibly well that right now a staggering 25% of users are actually relying on this service just to finance their daily groceries. I mean, think about that for a second. When people are taking out literal microloans for food that they're going to consume long before the final bill is even due, we're looking at something way deeper than just a handy convenience product. What we're actually looking at is a massive system masking some very serious financial strain, literally one $25 payment at a time.
Now, really quick before we dive in, I do need to give you our standard disclaimer. This explainer is strictly for educational purposes only, and it is not financial advice. Always consult a licensed professional before making major financial moves, and definitely read the fine print before signing up for any of these products. Okay, with that out of the way, let's pull back the curtain and look at the hidden mechanics operating behind the scenes of this entire industry.
Welcome to the Explainer. Today, we're diving deep into what we call the phantom debt trap. We're going to move step by step from that shiny, zero-friction convenience you experience at the checkout, straight into the harsh reality of hidden, compounding debt that catches so many people completely off guard.
So, here's our exact roadmap for today. We're going to cover the buy now illusion, then the psychology trap, exploding phantom debt, the credit score bomb, and finally, we'll wrap up with the rules for safe usage. Let's get right into it.
Starting with part 1, the buy now illusion. Buy now, pay later is always pitched to us as this instant, zero-interest, friction-free approval. But here is the wild part. 46% of users openly admit that the service actively causes them to overspend.
And that brings us right into part 2, the psychology trap. If we really want to understand why we overspend, we have to look at how deeply these tools bypass our brain's natural, totally normal hesitation to part with our hard-earned money.
See, major providers have embedded their technology so seamlessly into the checkout screens on platforms like Shopify and Amazon that your decision to take on debt happens in literally milliseconds. Typically, the setup requires you to pay 25% of the purchase price up front, and then the remaining 75% is due over the next 6 weeks. So just imagine you're sitting at a checkout screen right now for a $200 jacket. The algorithm uses what behavioral scientists call a present bias loop. It intentionally displays only that initial installment, say $50 today, in a much larger, bolder font. And that is exactly what your brain anchors to. It instantly processes the $50 as the cost, but the reality is you still owe $200 total. Sure, the full price is technically there on the screen, but it's pushed off to the side in much smaller text where you're way less likely to focus on it.
Listen to this crazy anecdote from a Federal Reserve researcher who was actually investigating this stuff. They noted, and I quote, "I would normally pay $20 for one shirt at J.Crew, but with Buy Now, Pay Later, I can spend $20 over several weeks for 3 shirts. That right there, that completely proves that lower checkout abandonment rates and massively inflated cart sizes aren't just some lucky glitch in the system. It's the algorithm doing exactly 100% what it was built to do."
And the financial result of that psychological engineering is absolutely staggering, 72%. Buy now, pay later shoppers spend 72% more per transaction than your standard online shopper. I mean, this is exactly why merchants are more than happy to hand over massive upfront fees to these providers. Think about it from their perspective. The merchant gets paid instantly, they move 72% more merchandise out the door, and the entire risk of you not making those future payments, it gets shifted entirely onto you and the lender.
Moving on to part 3, exploding phantom debt. Let's actually look at the macroeconomic data to see what happens when the convenience facade drops and the actual debt numbers are finally exposed.
It turns out nearly half, 47% of all Buy Now Pay Later users missed a payment on a loan in the past year. That is a massive 13 percentage point jump from just 2 years ago. Look, when nearly half of all the people using a specific financial product are missing their payments, it is a giant, glaring red flag for the broader economy.
And this whole situation leads us directly to a fairly terrifying economic concept known as phantom debt. It's defined as an estimated $700 billion black hole of unreported consumer obligations. Because most of these services don't actually report your loan activity to traditional credit bureaus, this debt is completely invisible to normal lenders. So if you go to the bank to apply for a car loan or a mortgage, the bank literally has no idea about your 5 active Buy Now Pay Later loans. Hiding this data causes traditional lenders to unknowingly extend even more credit to consumers who frankly are already dangerously overleveraged. So how do people get so over-leveraged in the first place? Well, it's something called loan stacking. A full 60% of users hold multiple loans simultaneously. You take one out for a new pair of shoes, maybe another one for a kitchen appliance, and hey, another one during a random flash sale. Suddenly, you aren't just making a single, easy payment anymore, you are managing a complex portfolio of microloans. You're forced to juggle completely different due dates across a half dozen different apps and providers, and mathematically speaking, stacking these loans basically compounds the probability that you are eventually going to miss a payment deadline. It turns your monthly budget into a total coordination nightmare.
Which brings us to part 4, the credit score bomb. Because missing those compounded payments carries some truly severe, hidden consequences.
So when you miss a payment, it usually means you're getting hit with a late fee. According to the CFPB, the average late fee is $9.99, which effectively acts as a massive 10% penalty, hitting you hard right on a standard $25 installment. But unfortunately, the late fees are really just the beginning. Starting in 2026, the FICO rules are changing, and it introduces this brutal asymmetry to the whole system. If you pay on time, it remains mostly unreported. You get absolutely zero credit booster for doing the right thing. But if you pay late, that gets reported immediately, and the damage stays on your credit report for 7 long years. It is literally all of the risk with virtually none of the reward.
And yet, despite all of that, 62% of users wrongly believe they're actually building their credit by using Buy Now, Pay Later. I really want that to sink in for a second. The vast majority of people using these platforms genuinely think they are improving their financial health, when in reality, they are actually just accumulating invisible debt that offers no credit upside whatsoever, but can suddenly and severely damage their financial future the second something goes wrong.
All right, finally, let's get into part 5, rules for safe usage. Look, Buy Now, Pay Later isn't inherently evil, okay? It's really just a neutral financial tool. But navigating it safely, that requires some really intense personal discipline. So here are 5 strict rules for safe usage to protect yourself. Number 1, only buy what you can actually pay for in full, right this exact second. Number 2, never ever finance consumables like groceries or gas. If you're gonna consume it immediately, do not finance it. Number 3, keep a maximum of 1 active loan at a time. Like we talked about, stacking loans is just a guaranteed fast track into the debt trap. Number 4, add all of your payment due dates to your calendar the literal second you sign up. Don't wait. And number 5, if you do mess up and you are late, call them immediately. It turns out 88% of people who simply pick up the phone and ask get their late fees reduced or completely waived.
I really want to leave you with this final, provocative thought today to kind of summarize the incredible psychological sophistication we've seen here. The very next time you are sitting at a checkout screen and that boldly colored button pops up offering you 4 easy payments, just pause and ask yourself, are you actually buying convenience or are you just buying debt? Make sure you know exactly which category you fall into and act accordingly.
If you found this breakdown helpful today, please make sure to like, share, and subscribe to The Explainer. We're here to break down the hidden systems impacting your money and your everyday life. You definitely will not want to miss our very next Explainer, where we dive deep into the Social Security Trust Fund to figure out what the latest data actually means for your retirement. Also, drop a comment below if you've ever found yourself juggling way too many of these payments at once. Thank you so much for learning with us today, and we'll see you in the next one.